Snipers, you have to see what's happening to the Bitcoin price this Saturday, as we are not seeing any price action above 46,000 US dollars, which is the important resistance level right now inside of the range that we're playing in between 44,800 and this 200-day moving average, which is at 46,000 US dollars. And so because we're in this extremely tight area, even if we get above 46,000, we have 47,000 as the final roadblock for the bulls to get above this monthly open if we want to assume any further upside. And of course, you guys know, because we have this wick down towards the $41,950 level, if we start to cross below 44,800, the speed in which we could come down below 41,950, which pretty much means that we'll go into the high $30,000 price range, becomes extremely likely, and it could happen extremely fast since the order books have already been cleared out from this range. And so because it's the weekend, the markets are the most manipulated due to CME futures being closed. Sunday is coming. I want to be a little bit more freestyle today, and we're going to take a look at one of my favorite Fibonacci tools, the Fib Speed Resistance Fan, and actually just take the bottom of this recent push down to this candle low here of 28,805, and I want to talk about some Fibonacci levels that also will factor in time, because what you'll notice so far is if we were to look at this Fibonacci retracement thus far, we have come to the 3.8. We've already wicked below the 38% level, and we know the golden zone sits right here between the 618 and the 6.5, and you can see this is showing confluence with this $38,000 level down towards this $36,500 level, where we have this market structural support, which was previous resistance. It's been my area of interest since we've started this downside move coming below 49,700. So understand that if we were to look at time factored into this retracement, if we were to just come down to the golden zone at this point, and we were to assume that we were going to hold this support, at least for the short term, then what we could expect is towards the latter part of September, at some point or another, this is going to be the area where we're going to find some volume, because so far we've come to test 38% Fibonacci level, and we have yet to see volume indicating that there is that potential for a further retracement. And understand this as well. We're going to look at altcoins as well. We're not going to really cover traditional markets today. But right now, with Bitcoin seeing this downside push, this is the first time we've been able to test our altcoin prediction. So I'm not going to just drill that into this video. We've been talking about that a lot. But what I am going to talk about is understand the risk factor here, that if Bitcoin does see some downside, we are only talking about, let's say, less than 20% downside, maybe at the worst towards the latter part of this, let's say, bear market. We could even potentially see maybe up to 40% downside, maybe 50% downside from the current level of price action. But I don't expect Bitcoin to ever come back down below 20,000, the previous all-time high. And so with only, let's say, less than 20% downside here, we look at something like Ethereum, and this is really going to amplify itself with other altcoins that are even smaller of a market cap. But from the current price, we're talking a 40% downside risk just with the price action being below 34.54, which it currently is right now. And so now this is a major resistance, and we have 40% downside for the next destination that Ethereum could potentially find some volume. But with Bitcoin, it's less than 20%. So this is why I've been talking about this altcoin prediction quite substantially over the last few weeks, because it could really, give people insight as to the way their portfolio is currently allocated, and potentially reallocating certain areas of their portfolio, maybe hedging back into Bitcoin to prevent further downside in their portfolio if we were to see this continuation move to the downside. We're going to talk about the bullish scenario, but so far, because we're below 46,000, I have to be your umpire, and I have to say that we have to start looking at the downside targets, because we are not above the 200-day moving average right now, which is not a positive sign. And we're so close to coming below this 20-week moving average that we've already seen the wick down towards the important range of where the 20-week moving average sits. So seeing volume come in is going to really drive the price down if we really start to come back below 44,800. So understand that at this point, when we're looking at Bitcoin's price squeezing between this 50-day moving average and this 200-day moving average, it is in a critical area. If we see any volume to the upside, All we need to do is get above the monthly open at 47,000 to assume that we could see 49,700 again. And then from there, we can determine the strength in which we come to this level and see if this is going to be able to hold and for us to finally break through the $50,000 break even with decisiveness, or if it's going to reject. And so that's for the bulls. But let's say we continue to see downside pressure pushing Bitcoin down. Understand that when they say buy the dip, you want to buy the dip during an uptrend, right? So you buy the dip, you buy the dip, you buy the dip. But when you're coming down, you don't want to buy the dips. You want to understand that cash is a position, staying on the sidelines is not a bad thing, and that there is a potential there could be even further downside targets if we are seeing a reversal in trend, at least for the medium term. And so buying these dips here could really trap a lot of people. Even if we come down to the 100-day moving average at that $40,000 level, what if we see a bounce to 47,000, but then continue downside towards the end of this year to finally test this multi-year support level down at the $24,000 to $25,000 range? Wouldn't you more rather buy the dip at the end of the trend versus buying it on the way towards the destination of where it's eventually going to go? So we're in a very critical point, and understanding the fact that right now this range that we're in is so critical is probably the most important thing that you could walk away with, because if we break below 44,800, I don't expect us to just sit here between 41,000 and 44,000, because we've already seen the order books cleared. And so seeing a more intense downside scenario is certainly on the table right now, and I want to make that clear. Now, with altcoins so far, our prediction seems to be in line with the fact that Bitcoin dominance is in the early stages of a reversal and could potentially double bottom exactly like how the DXY did. And so far, we have yet to form any further lows. This is causing Ethereum to not perform as strong as Bitcoin when it's coming to this downside pressure, and we are below 3454, and that is a very big concern for me, because this could potentially bring Ethereum down to the 1980 to 1760 range again, and the Ethereum to Bitcoin chart is not showing strength. We are below the monthly open right now, and now it's turning into a resistance, and we have not seen anything significant here other than a retest of these highs that so far has rejected itself. And so coming down below this monthly open right now is not a good sign for the Ethereum to Bitcoin chart, and this could lead other altcoins if we see further downside in the Bitcoin price, because that's the only reason I would expect us to see Bitcoin dominance increase. We have to attach that narrative. So breaking 65,000 Satoshis would be the confirmation that Bitcoin is really going to start seeing some strength against these altcoins, and the altcoins outside of Bitcoin chart has yet to form any further highs. So a double top here or a lower high or a higher high is very likely, and that would coincide with Bitcoin dominance double bottoming, right? So this is what we're really going to have to monitor here. And with the total cryptocurrency market cap chart, we also failed to form new highs, which tells me that this could potentially be a lower high before some further downside. So we really want to monitor this, and the previous weekly open at 2.05 trillion kind of sits here at this $2 trillion big even for total market cap. So we start to break below this area. 1.78 trillion is the next level of support, but there is a potential we come back in the range between 1.13 trillion and 1.78 trillion to just kind of maybe even form a higher low here at some point. And this is just going to be pretty much money moving in between different coins, probably a lot of money moving away from altcoins back into Bitcoin if we start to see the total market cap chart come down. And so we want to keep this in mind, that with the push that we saw to the upside for the total market cap, this is when Bitcoin pretty much topped out. It maybe didn't top out in price, but it topped out in dominance. And this was the start of 2021. And this whole move to the upside for the total market cap from 1.13 trillion to 2.259 trillion was altcoin season number one. And then this push down, we were still in altcoin season because we came back to form a high to retest the rejected high. And this was another altcoin season. It was a different type of altcoin season, But if we come down again, this could change the dynamics of the market. And so that's what my concern has been with the others' dominance and Bitcoin dominance at such critical levels. And with Bitcoin dominance coming now for the first time to test the 20-week moving average, that's all we need to know. Since the start of altcoin season, this was the first test. It was the same thing with the DXY. It came up, it tested the 20-week moving average, rejected, but then eventually found its way back above it and then double bottomed. And so these two charts being very correlated here, the Bitcoin dominance and DXY chart, could certainly indicate hints that the Bitcoin dominance chart also wants to double bottom. And so hope you enjoyed today's freestyle analysis. I appreciate each and every one of you snipers tuning into the channel. Remember to smash the like button for the YouTube algorithm, and I will see you guys on Sunday. It's going to be interesting because futures markets will open tomorrow, and we'll switch our previous weekly opens as always on the chart, which is always in green. And with that, thank you all for tuning in today. Until next time, snipers